Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back to The Full Ratchet. On today's special segment of Investor Stories, the investors address trends, sectors, and markets that they think are positioned for outsized returns in the future. This is the segment called What's Next? On today's special segment, we have Emily Paxhia of Poseidon. Emily, can you talk about sectors or trends maybe within the cannabis space that you're bullish on?
I am bullish on the technology pieces of this sector. I feel like, or of the industry, I feel like the operators are now, competition is coming and it's getting more fierce in every market as they mature. And so I think that the operators are going to be getting more selective about the technology platforms they rely upon and how integrated into their business they are. I think there was a period of time where, I don't know if you're familiar with Maslow's needs, but like on the bottom of it's a pyramid, and on the bottom of the pyramid is like, you got to cover your base needs. You have to have your shelter and your food. I feel like these operators have been operating kind of on the first level of the needs pyramid, and they've just been making sure they can get doors open and people in those doors and products on the shelves. Now we're moving up the pyramid in terms of like getting to the higher level of things. And so we're getting more sophisticated in branding. We're getting more sophisticated in e-commerce. We're getting more sophisticated in communicating and marketing to new consumer segments in cannabis, and sophisticated in the ways that we talk about these things. So I believe that the technology platforms and like the data insights around that are going to become more and more important. And so I think we're going to see real adoption of technology, and the technology platforms are innovating in their own right. So I think you have kind of a flywheel effect of really cool things coming out of that space in cannabis.
On this special segment, we have Ben Sun of Primary Venture Partners. Ben, can you talk about sectors or trends that you're bullish on, and maybe some areas that other VCs may be less bullish on, but that you find really interesting?
Yeah, I wouldn't say we're, a real contrarian type firm, or myself as an investor contrarian, but I would tell you that I've definitely invested and done stuff where investors weren't looking for that category at all. So less that they were like, I hate this category. They just probably weren't looking at it all.
Luggage, for instance?
Luggage people actually were somewhat looking into. Okay. So I actually would say that was less contrarian. I would say, when we did Slice, it was originally called My Pizza, and it was a vertical marketplace for independent pizza shops, right? So, with a business like Seamless Grubhub, people are like, why are you doing a vertical marketplace just for pizza? And so that was one deal. I remember when we did do it, even our LPs, when they saw us, do the capital call and talk about the business, they were like, what did I just get myself into?
What was the reason? Do tell.
So first of all, when I first met Alir Sela, who's the founder and CEO, Alir grew up in Staten Island. He's Albanian American. Alir's father and uncle owned a pizza shop in Manhattan. Alir would tell you that if you go to any pizza shop in New York City, if they tell you they're Italian, there's probably an 80% chance they're Albanian. so like Alir's family is like not only his father, his uncle, but his family, friends, and like they're all in the pizza business. So Alir, after college, he graduates in a comp sci degree, starts up this like consultancy shop, and he basically starts building websites for his friends and family's pizza businesses. And then he said, you know what, I'm going to help you with online ordering. And so he allows us to help with online ordering and starts basically building online ordering for them and taking a transaction fee for every pizza order. And so he builds all these sites on one platform, calls it My Pizza. And by the time I met him, Alir had signed up 3,000 pizza shops, and he was processing $40 million of pizza orders a year. He had about a 10% take rate. So he had $4 million in revenues, and he was doing $3 million in profit.
Wow.
And I was like scratching my head. Why does this exist? Like, what is happening here? And then I soon realized, and he was working with pizza shops, not just in New York. It was actually across the United States. And I had looked into it. I'm like, you know who the biggest online ordering player at the time was? And this is 5 years ago. I'm like, the biggest online ordering player is actually not Seamless Grubhub. The biggest online ordering player is Domino's. Domino's does more. I was
going to guess that.
Yeah, does more in online orders than Seamless Grubhub. And so I said, wow. And then I looked through Domino's and I said, holy cow, if you looked at Domino's stock about 10 years ago, it was at $3. Now I think it's somewhere about $400. So it's been over 100x stock, right? It's outperformed Google, Facebook, Amazon.
Wow.
In the last 10 years. And people ask why. It's like, well, it's not because the pizza got 100 times better. I can tell you that much. Definitely has not gotten 100 times better. It's because they do 70% of their revenue is digital orders. And so why is that important? Is that when people order online, they order more. And so when you call into a Domino's franchisee on the phone, it's at the busiest time. It's dinner. They're trying to get you off the phone so they can make pizza.
Right.
So they're not getting on the phone with you and saying, hey, do you know we have wings, garlic knots? You want a 2-liter Coke? By the way, we have these delicious brownies, right?
Well, and you don't see the beautiful visuals right in front of your face.
You don't see the beautiful visuals. You don't see all the toppings, right? Oh, you have banana peppers? You didn't know that, right?
Good point.
And so
an extra $1.50, $2 for each one you add.
And it's all high margin going in the same order, right? So what happened was Domino's average order value went from $18 to $30 from phone to digital. Whoa. So with just the same customer in that same order, they grew that order of revenue by 60 or 70%.
And how is that relevant for Slice?
Well,
in the competition versus the Grubhub Seamless.
So you think about it, for pizza shops, to Domino's, what happened was that the average unit store went from $600,000 to over $1 million top line, right? Your average in the pizza shop is doing like $500,000 or $600,000, but because they don't do online ordering well, they're still at $500,000 or $600,000. And so they were always handicapped by this. And so what Alir basically was doing was saying to all these independent pizza shops, let me provide you online ordering and digital technology and not charge you 30 or 40% that Seamless Grubhub does. I'm going to do it for, 9 or 10%. And so that way you're going to be promoting to your customer and trying to get them to order directly to you. So even if they come through a Seamless Grubhub, you're going to try to get them to switch over. And on top of that, Seamless Grubhub as an aggregator only worked really well in super dense urban markets. And pizza as this giant category is in every small town, rural area, suburb, and city, right? So pizza is everywhere. When you go ski in Vermont in a small town, there's 4 pizza shops.
And they,
right?
they often have their own delivery staff and structure. Yeah.
Most pizza shops make most of their money through delivery. So they didn't even need like a DoorDash doing delivery. Their business inherently had delivery. They just needed someone to help with online ordering and digital marketing.
Got it. So this could become like the embedded Shopify on their site. You go to the pizza website, then you click the button, it takes you to Slice without even you knowing it.
Yeah. And the good thing about it is most people actually have 3 or 4 pizza shops that they love. Like they love the wings at one place, the pan pizza, deep dish on another. And so by aggregating all, he also gets a better consumer experience. So people download the Slice app and say, Geno's for deep dish and wings for Johnny's and subs from, Mike's. And that's the benefit. So he works with the pizza shop where he hosts their site, but also provides a consumer app and experience. So he's built an amazing business. But that was a good example of like, you're finding something serendipitously that no one else is looking for. And you're like, wow, there's something special here. And those are the kind of things that we especially love. And that's why I think going with this, like, hey, founder mentality first approach to investing allows you to just be more open-minded and find out these really amazing gems in the portfolio.
That's where the secrets come from.
It is. Coupang's the same way. No one was investing in Korea. No one back then. 2010, if you talk to any firm that had operations in Asia, they'd say, hey, China and India. And I'd go to them and be like, hey, we need to raise money for Coupang. Interested? No. We're not interested in Korea. And now like Korea's a hot market. Like there's a ton of unicorns out of there now. But that's what you kind of look for is like, look for the founder. The founders often sniff out the opportunity and they'll surprise you.
On today's special segment, we have Yaniv Suissa of SineWave. Yaniv, can you talk about sectors or trends that you're bullish on?
Sure. I'm particularly bullish on what we talked about, the intersection of digital and physical. We at SineWave are not afraid to have companies that have an element of hardware to them. We're in Aeon 3D, which is a thermoplastics printing company, where we're in Evolve, which went public for $2 billion, which is physical security and cybersecurity tied together. I love supply chain. I think that's huge. And I like fintech from the perspective, I'm particularly interested, I'm looking a lot now and have always been from the beginning of the fund for a fraud management technology. It's a great business model, right? You lose 100 million in fraud, we can save you 80 million, give us 50. It's like, why not, right? And then I like climate tech, but I think of it more as a vertical than independent companies. I think that, a data analytics company could help significantly in the climate tech space, things of that nature.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.